Welcome to a funds review series by AltAccess. I'm Yogesh, founder and CEO of AltAccess and ex-equity research analyst at Goldman Sachs. Today, I'm walking you through an independent review of Equitree Emerging Opportunities PMS. Just to be very clear, this is not a review sponsored by anyone. It's an honest, unbiased assessment of the fund. At AltAccess, our job is simple. We identify PMS strategies that not only outperform the benchmarks in the past, but also have the highest probability of continuing that outperformance going forward. To do this, we follow a rigorous 30-point proprietary checklist that deeply analyzes the fund manager, past performance, investment philosophy, and risk metrics. If you're currently exploring a PMS or an AIF and want a data-backed, unbiased view before investing, book a call using the link below in the description. With that said, let's dive straight into the fund review. First, let's dive deeper into Equitree's investment strategy. They follow a private equity style of investing but in listed markets. The philosophy is simple. Build a concentrated portfolio with very low churn and back businesses that can structurally compound earnings at 20 to 25% over the long term. One of the key disciplines in their process is looking for growth at reasonable valuations, specifically companies with a PEG ratio of less than 1. This means a company which is growing at 25%, they will not pay more than 25 times earnings for it. That is why sectors like defense, which are overvalued and trading at 60 to 70 times earnings, will not make it to their portfolio. So it's clear, reasonable valuations and high growth. They enter companies very early with an average market cap of around 2000 crores. Because of this, they also agree the fund is not scalable and they have decided to cap the fund size at 2000 crores AUM. Now, let me walk you through the sectors that Equitree is very bullish on. First, export-oriented industries that are taking Indian products global, benefiting from Europe plus one and China plus one trend. This is very powerful given government's push on manufacturing and global MNCs like Apple showing strong interest in India by investing very heavily. Next is import substitution plays. A surprisingly large part of what we consume in electronics and auto ancillaries is imported. They are very bullish on companies replacing these imports with domestic products. Lastly, infrastructure spending and ancillary industries. India's infrastructure is growing massively. They're not just betting on niche infra plays, but also on companies that are supporting them. That is where cash flows are really strong. The common thread across all investments is scalable business models with high growth visibility. Take a pause and look at their portfolio sector allocation. As promised, now let me take you through one of their success stories. Such one standout case is Shakti Pumps. Equitree identified it early as the first company to bring stainless steel solar pumps into the Indian markets, a game changer in terms of technology. While the industry operated around 7% margins, Shakti Pumps were operating at around 15% EBITDA margin. Despite a 40-50% correction in the stock at one stage due to external reasons, Equitree held on with conviction. They believe that despite the macro tension and slowdown, the company's fundamentals were holding strong and they decided not to take any action. That decision turned into a 40x return over time. This reflects their ability to back businesses through volatility, focusing purely on fundamentals. Now, coming to Equitree's portfolio performance. They've consistently outperformed benchmarks, in some cases by a 3x margin. For instance, in 2023, the benchmarks delivered a 26% return, while Equitree delivered a 79% return. In 2024, benchmarks were up 16%, while Equitree achieved a 51% return. This outperformance has been driven by the top performing holdings, such as Shakti Pumps, which went up 40 times, Satlam Industries, which went up 25 times, and Mirza International, which went up 11 times. Putting it all together, Equitree PMS stands out as a strategy built on structural growth themes and disciplined investing. To summarize, it has exposure to long-term megatrends, a clear, repeatable investment framework, and a strong, experienced investment team. That said, every strategy suits a different investor profile. To understand whether Equitree PMS is the right fit for you, book a call with us through our website today.